clients are the foreign direct investors in China, some 300 companies, the traditional large multinationals from Europe and from the United States. They're all pretty bullish on China. They're all talking with their head office about getting more funds to invest in the China market. And when you think about what's going to happen in the third quarter, as results come in, we're going to find a lot of European and US companies are reporting really strong earnings in China compared to what they're getting in the rest of the world. Now, you're right, it is unbalanced at the moment. I think we were all hoping for a stronger retail sales number today, because so far it's been led by an industrial upturn. And you can only run industry up for so long without the retail sales number coming up, and you get in an oversupply situation and you've got to pull back. But right now, the conversations I've been in through the last week with companies running businesses in China, they're pretty confident about the quarter we're in, the third quarter, and they're starting to build inventory for the fourth quarter, acknowledging it's still a bit soft, but they're more confident in where they're going. And I've got to say, in that regard, China really stands out from most other markets we're hearing about around the world, where no one has much visibility down the road.
Yeah, no, it's a good point. I wonder if these same clients, though, are rattled in any way by what we're watching with the U.S.-China relationship. I mean, those who invest in the financial markets seem pretty reassured that the terms of the trade deal will stay intact, but the relationship is deteriorating on so many fronts. Does this worry your clients?
Yes, it does. So we hear this in our discussions with the forum members, but we also see it in surveys, the American Chamber surveys and all of that. And surveys being done by banks like UBS and others. They all do show that managers and multinational companies, particularly the US firms, regard the deterioration in relationship as a significant factor that goes all the way up to board level. And the boards want to know a response from the China team about how to reduce that risk. So companies are working on how to separate enough of their business to avoid being damaged. Does that reduce the commitment they're making to China? Now, the fascinating thing about this is, does it reduce the commitment of US corporates to doing business in China? You would think that would be the case, given all of the pyrotechnics going on at the political level, but the answer to that is no. Right. Almost, I cannot think of one US company that is reducing its commitment to China. All they're doing is making sure that they can handle decoupling, that the China operation can be reasonably standalone, and they're not going to be blown up into a big public issue in a spat between the governments. And that's the tough thing for them to handle.
It's getting harder.